Welcome to Young Money. I'm Nosy Pombanjwa, and this is CNBC Africa's freshest and youngest show. It's the show about us, the ones who want to go beyond the hustle, the ones who want those Madivas. Tonight we're focusing on having your financials in order when you're starting up your business. And we're going to be talking about this with Ken Swettenham. He is a financial advisor. And we're also going to be catching up with a member of the Money Tree Group. And this is a business looking to accelerate economic growth in South Africa as well as on the continent by creating financially savvy, well-informed and equipped youth population. Now remember that if you want the Young Money crew to come to you, all you need to do is send us a tweet. The hashtag is YoungMoney410. Following me at The Real Nosy, and of course following us at CNBC Africa. Let's get right into it. Is a financial advisor, and he joins me now as he's giving us the lowdown on how to get your finances in order when you're starting up your business. Ken, thank you so much for making the time to join us. The finances always seem to be the biggest headache for entrepreneurs as they get their business on the ground. Let's start right at the beginning, when you are in the capital raising phase. How should you be thinking about that?
Well, one's got to bear in mind, you've actually said hit the nail on the head by raising capital. It is the biggest problem for any young business person, regardless of what they're trying to do. There's obviously the most obvious place to go for capital is to the banks. But the banks want security, the banks want a track record, and they're not always as helpful as what young entrepreneurs would like to have. The second opportunity is venture capitalists, people who are prepared to invest in young businesses, also not very easy.
What do they want? What do the venture capitalists want?
The venture capitalists are looking for growth. They're looking to put their money into something that is not a standard investment, like you would normally get in the banks or the insurance companies or on the stock market. They're looking for growth businesses. They're looking for where they can make a good money quickly.
And it certainly sounds like it's the sexy sectors, the technologies and the high innovation that's going to catch the eye of a venture capitalist.
Well, it's not only that, it's any business where the venture capitalist sees there could be potential growth. I've recently come across a situation where a venture capitalist invested money in a motor dealership. Now, motor dealerships are on every corner. You wouldn't think it was a specialized business, but this particular investor saw a potential growth there. So it doesn't matter what you believe your business is going to be, you can find somebody to invest in that business.
So we've got debt from banks, we've got venture capitalists looking for growth. How else do we raise capital?
Well, obviously, venture capitalists are often silent partners. You can go to people who are not venture capitalists, even as simply as family and friends. And for a young person starting out who doesn't have access to the banks or even venture capitalists, sometimes just going to a family or friends member to get them to invest in their business is the way to start. Small amounts of money. Remember, most entrepreneurs are starting on the ground. They are not buying million-rand buildings. They are not setting up branches across the country. They're often starting from a small office, even from home. They don't need a lot of money to get themselves going.
So Ken, let's say they get the money, whether it's from family, friends, whether it's a venture capitalist or even through debt in the bank, and now the business has started. And now the big nightmare of having your financials in order. What are the big issues that we should be focusing on as young entrepreneurs?
Well, first of all, you need to get a good accountant on your side or a bookkeeper, somebody who can keep your books for you. You've got to keep in mind most entrepreneurs are not bookkeepers, they're not accountants, and you need to focus on your business in any case. You don't want to spend hours and often late into the night doing your own books. For a reasonable fee, somebody will do that for you. And the best way to find somebody like that is through a referral. You can pick an accountant out of the telephone directory, but sometimes going again to family, friends, other people who are already in business and say to them, who's doing your books? Are they good? Are you happy? Get them on your side. Secondly, and this is one I like to stress particularly, is to be tax compliant. It's very easy to start a business. It's very easy to set up a little shop and start trading. But if SARS gets wind of it, they're going to want their cut of the pie. You need to know the difference between VAT. You need to know the difference between company tax. You need to know what PAYE is. You need to pay UIF for any staff you might employ. And again, you don't need to be an expert. You can get somebody to assist you with that, but you do need to know the basics.
How do we get around this idea that a lot of entrepreneurs always try to find a way of working around the tax issue and always trying to find loopholes so that they don't have to comply? What is the long-term effect of thinking like that?
It's a very good question, and I'm glad you asked it. The long-term effect is once you start growing and once you start having to be tax compliant, you might have problems. Remember, if you're going to end up working with government, for example, you have to have a tax clearance certificate as a very basic requirement before you start applying for tenders. A lot of big companies go the same way. The second you want to apply for a tender for business, the first thing they ask for is your tax clearance certificate. If you're not tax compliant, you're not going to get it. SARS is extremely strict about the issuing of tax clearance certificates, and if you're not up to date with your tax compliance, you're not going to get the information.
Final question, it's the big so what. So if you've got your finger on your financials and you've got a good relationship with your accountant, why does this even matter if my product is flying off the shelves and I'm doing really well as an entrepreneur?
Well, in fact, it matters even more so if your business is being successful, because you're making money, you're putting money in your pocket. Where a lot of people make the mistake is that they assume that they are the business. That's not always the case. You have to diversify yourself from the business. You have to be careful how you spend the business's money. SARS may view that as your personal income, and personal tax at the higher levels is higher than business tax. And sooner or later, if you're living a lifestyle which your tax affairs or your books don't justify, you will be found out. And it's happened to some very famous people in this country without mentioning any names here. So yes, you might get away with it for months, if not years. But as your business grows and as you become more prominent, you will be found out. So get it right from the start.
Ken, thank you so much for your time. Get it right from the start. That's a very big thank you to Ken Swettenham, a financial advisor, talking to us all the way from how to raise capital and, of course, helping us to understand what is the importance of having a good set of financials for the business. Now, the Money Tree Group is determined to unlock youth potential. This business is looking to create a financially savvy, well-informed and equipped youth population. Let's take a look at this conversation I had with Tokologo Phetla. He's the Director of Operations and Strategy at the Money Tree Group. Tokologo, thank you so much for making the time to join us. I'm calling you TK from now on. But let's get a sense of what brings you here. You are in a lover, stone throw away from Sandton, in a plush office at the age of 21. Give us some background.
Well, I guess growing up, I've always been entrepreneurial. I started 2 businesses in high school, which failed.
And these businesses were?
One was a fuel additive distribution company. I got screwed over actually, but it's okay. And another one, I developed systems for the SAPS, technology systems, with my mentor back then. And I came to UCT, I'm part of the Ellen Gray Scholar Fellowship, and that's where I met my business partners. So we all studied finance, business science there. And we realized that young people don't invest. Okay, young people spend, according to a recent report, most of our money, students, is spent on condoms and alcohol. Okay, so we wanted to redirect that spending pattern. So it actually didn't start off as a company, it started off as a website, right, where we taught young people how to invest, save.
And redirect their condom spend into something more
constructive,
right?
Yeah, to create wealth. So it wasn't a business, it was just a cool thing to do. So we went on a road show. We visited about 60 high schools initially and 7 universities where we promoted the website. And from there, we saw an opportunity to actually start a business. So we launched our first publication. This is actually the first one.
And this is, and you're calling it the Money Tree, as I can see.
Yeah, it's called the Money Tree.
And so what does the publication actually achieve? Now that you've taken your message onto a website platform and now you're putting it into print, what does this do?
Well, the Money Tree, we aim to teach young people about financial education, but in a very fun way that they can relate to and engage with. So finance is taught, the way it's currently taught, it makes it seem like a very boring thing, that it's only for certain people. But personal finance, we believe, applies to everyone. Everyone uses money. Everyone needs to know how to manage money. And the Money Tree is the platform to try and relay that message to young people.
So post the message. So say young people get the message, they've picked up the publication, they've been onto the website,
yes,
and they understand that they need to start investing.
Yes.
What are you advising them? What are you telling them about what to do with their money?
Well, in the money tree, we advise them on what they can do with their spare cash, but we partner with the Jane Busher Investment Group. So usually, when a student is ready to invest through our education program called Student Investor, they can actually sign up to open a unit trust with the Jane Busher Investment Group. It's about 300 Rand minimum investment. There's no application fees. There's no withdrawal fees. So it's a very student-friendly product. But we don't really mind where they invest. They don't need to invest here. They can invest with Ellen Gray. We're really not biased.
And it's all the names that you've had an association with, obviously.
Yes.
But talk to me about the success for this kind of intervention. I mean, what has been the demand like from students that you reached out to? Have they responded positively?
Yes, actually they have. Most of them actually wanted a game as well. So that's what we're working on now. One of our applications. Working on a game where we can teach young people about savings, but in a very fun way, because I think that will reach more people and gain more traction than a publication.
TK, give me a sense of the young people category. What are the age variations that you're looking at?
Well, we 16 to 24. So the money tree specifically goes to high schools, 100 high schools right now, and 10 universities across the country. It's free of charge. It's funded through advertising. Except this. So that's a special edition where the Department of Science and Technology asked us to host a campaign for them. So because we have the network and we have access to this market, we tailor a campaign, their own publication, activations, radio campaigns, etc.
So let's talk about the business for a second. It's been 2 years, 2 full years in operation. Do you consider yourself successful at this stage?
Not even close. We're still in product development phase, I think, with some of the products we're working on.
Yeah.
And the market is still not convinced for some reason, which I don't understand. And I want to underline that. I really don't understand why young people are not a lucrative market for corporates to access. There are some companies that say, no, they're too young. But I know I opened my first bank account when I was 16. Yeah. And I've stayed with FNB ever since. I'll never change. I know I'll never. So you need to get them while they're young. And the money tree, we're trying to provide that platform because it makes sense to us. But most people in the private sector haven't bought in yet. So we don't believe we've involved all stakeholders in this financial education drive we're trying to push. We've tried, but I think they'll need more convincing.
Guys, thank you so much for making the time to join us. Remember that if you want the Young Money crew to come to you, all you need to do is drop us a tweet. The hashtag is YoungMoney410. Following me at The Real Nosy and, of course, at CNBC Africa. Let's make sure that we're building empires and, of course, stacking up those Madibas.